Good morning, ladies and gentlemen. This is Al Redmer from the Maryland Insurance Administration, and would like to welcome you to our webinar this morning on Insurance Disaster Preparedness Review. I would like to mention that this is being recorded. It will be available on our website soon. That website is insurance.maryland.gov. And as we go through this morning's presentation, feel free to include your questions into our chat room. So type in your questions into the chat room, and we will certainly handle them before we conclude this morning. So the agenda. This is a list of items that we hope to discuss this morning, and naturally we'll be happy to answer any questions regarding this or anything else, quite frankly. Just a brief overview about the Maryland Insurance Administration. We are the state agency that regulates Maryland's insurance market. So our role is to make sure that insurers act in accordance with Maryland's insurance laws. It is important to note that those laws come from the Maryland General Assembly. So we don't make it up. We enforce what is given to us by the Maryland General Assembly, and we are also the agency that will investigate and hopefully resolve complaints or questions that you might have about insurers and their business activities in the state of Maryland. So first, let's go into what exactly is a disaster. And as you can imagine, it's a sudden event, such as an accident or a natural catastrophe that causes a lot of damage or loss of life. And we have included just a few examples of disasters for your review. And some general tips that should be helpful is naturally you want to maintain all of the appropriate contact information for both your insurance carrier and also your advisor, your agent or broker if you use one. And you want to protect your records, including your insurance policies and critical information. Also very important is to create a personal inventory of the property that you own before the disaster occurs. We're going to talk in a little bit about how to file a claim, and at some point in the process, you have to provide a report to the insurance company regarding the personal property that you have lost as a result of the claim. Naturally, trying to recreate that information if your property has been lost can be difficult. So it's important for you to take an inventory of your property before the claim occurs. You can do that by doing it in writing, using the tools that we have available on this page. Also, it's helpful to just go around your house, open up your closets, your drawers, and take photographs or videos of your belongings. And again, that you can download that and keep it on your smartphone. And we also have a worksheet that's available from the Maryland Insurance Administration. So for some general tips about being prepared, I think the first tip I would provide is to pay attention to what's going on around you, particularly as it relates to the weather. And when there are warnings from public officials, heed them. Don't ignore them. Take them into account and prepare. You should also know some basic things about your property, such as how to cut off the gas and the other items that are listed here on the page. You should have an emergency plan for your entire family. Practice it so that you know what you will do in advance. There are also some community alerting systems that you can subscribe to, and naturally you want to have some emergency supplies that are readily available for you in the times of an emergency. Put together your emergency, we call it a go bag. So if you have to flee quickly, and it's easily readily available in the time of an emergency, and we've got a couple suggestions here for things that you can pack up and have available. For more information and some other tidbits, we have a website that is available on the screen here. Another thing that's important as far as a general tip, and that is if you've heard the warning that bad weather is coming, go out and walk around your property and survey it. What is it that's laying out in your backyard that if a 100-mile wind comes along, it would be used as a missile and could cause injury or property damage somewhere else? So we've all heard the phrase batten down the hatches, and that's good advice. So go outside. If you've got lawn chairs and those kinds of things, bring them inside and try to prepare your property in advance for the adverse weather conditions that may strike. So let's talk about the insurance piece of this, and it's very important that you make sure you have the right coverage for your home and contents. And and this is a reminder for all of us that periodically we need to meet with that trusted advisor, that insurance agent or broker, some advisor, and we need to try to identify all of our exposures to risk. There's a lot of risk out there. We need to identify all of it. We then need to try to quantify that risk. Then we need to make an informed decision about what we're going to do regarding the risk. And oftentimes making that informed decision involves the purchase or the changing of insurance. So we have to make sure we've got the right coverage based on your personal situation, and it's important to note as we go through this that homeowner policies usually do not cover flooding. So that's important to note. There's a couple of other things that we're going to talk about in a minute that also is likely not to be covered. Also regarding your automobile, if there's a disaster and there's damage to your auto, you are likely not to have it covered unless you have comprehensive coverage for your auto. If all of you have is liability insurance, that disaster is not going to cover your automobile. So that's important to look at, and again, make sure you are making an informed decision. So a few tips about how to have the right kind of coverage. First, it's important to know if your homeowner's policy is a policy that will provide coverage for actual cash value or the replacement cash value for any property that is lost. So if it is an actual cash value policy, we're going to look at the cost to replace your personal property that's been damaged with the same kind of quality and material, but then the insurance carrier will reduce an amount based on the depreciation for age and use. So if the item has been yours for a long time, you may have a significant reduction in the claim based on the age of that property. Whereas a replacement cash value policy will pay to replace the damaged personal property with that same like, kind, and quality, but it will do it up to the policy limits and will not subtract an amount based on the age of the property that's being replaced. So that is an important distinction between actual cash value and a replacement cash value policy. It's important that you know exactly what kind of coverage that you have. It's also important to note that if it is replacement cost coverage, you're not actually going to receive that value until the property has been replaced. And secondly, as you can imagine, because you are not going to see a reduction for the age of the property, that means the value of the claim will be a little bit higher, and naturally that means it's going to cost a little bit more to purchase that replacement cash value option. So after determining whether you have the right kind of coverage, you need to determine, do you have enough coverage? And that's an important point. And again, you need to chat with that advisor, whether it's an agent or broker, about determining and quantifying that risk and making an informed decision. Also, if you are making any improvements or additions to your home, it's important to notify your insurance carrier or your agent to make sure that your homeowner's policy is modified to take into consideration the changes that you are going to make. Obviously, if you have a property that's valued at $200,000 and you're putting a $100,000 addition on it, you don't want to keep that policy coverage at $200,000. Also, you need to determine any additional coverage that you may need that may not be included in the homeowner's policy automatically. So if you have significant number of antiques, jewelry, and those types of things, you might have more in value than is covered under your policy, and you need to review that with your carrier or your insurance representative. Also, regarding whether the policy limits are appropriate, most insurance carriers will require that the amount of coverage that you have is equal to a certain percentage of the total replacement cost of your home. And as you can see there, that's usually $80,000. So if you have a property that's $100,000, I'm sorry, not $80,000, 80%. So if you have a $100,000 property, they are going to require you to maintain a policy value of at least $80,000. So it's important to know the value of your property, compare it to the limits that you have to make sure that you are not underinsured, but it's also important to make sure that you are not overinsured. So as an example, the policy limits is based on the property of your, the value of your home, the structure itself. So if I exaggerate the point, if you have a home on the water and you paid $500,000 for that property, but your home, the structure, is worth $250,000 of that, then you don't want to have insurance limits that are more than the $250,000, because in the event of a total loss, they're only going to replace your structure. They are not going to pay you an amount for land. So again, make sure that your property is not underinsured or overinsured. And your agent and insurance company can provide you with direction regarding those issues. Another area where some folks get into trouble is not understanding how your insurance policy relates to local building codes. So if your home is damaged, and not just during a disaster, but any damage at all, the local building codes, if they have been changed since your home was built, you may be required to perform expensive upgrades to the property that would not necessarily be covered under your policy. So, and again, you need to ask your agent or your insurance company about these items. But let me give you 2 examples. If you have a 3,000 square foot home that was built in the 1950s, it probably does not have sprinkler systems in your home. If that home is destroyed and you have to rebuild it, the current local building code may require you to put sprinklers in your home. Because it was not lost during the time of the claim, the insurance company would not pay for that. They're not going to pay for something that was not there before the claim, so that could be a significant added cost to rebuilding the home that would not be covered as part of the claim. So you can have those kinds of things covered if you buy the right optional coverage. The second item is if I used a reference before, if you live on the water and the home was built in the 1930s, 40s, or 50s, and that home is destroyed for any reason, I can assure you now that the current building code may require the new home to be elevated 5 feet or 10 feet into the air, and if the local building code requires that, because it's different than the house was before the claim, it would not be covered unless you have purchased this additional optional coverage. So again, it's critically important that you work with your advisor to determine the risk that you have and make informed decisions about how to handle it. So let's talk a little bit about what we know that is typically not covered under your homeowner's policy. Most policies will not cover mudslides, earth movement, etc., and you can see the list there. Earth movement is an example of an earthquake. So your homeowner's policy may not cover earth movement, probably doesn't. So if we have a earthquake like we have previously and there's damage to your home, it would not be covered. Again, these coverages can be available on an optional basis, but it's critically important that you know what you currently have and compare it as to what you should or would like to have. Flooding is typically not covered as well. You typically have to get flood insurance through a separate policy. And for more information, you can contact your insurance agent or broker, or you can go to the website that we have provided on this slide. So let's look at what we know you will have to pay in the event of a claim. So there are typically deductibles. Now, some policies have a deductible that is based on a dollar amount, let's say $1,000. There are other policies that have deductibles that are a percentage of the policy itself. So naturally, a percentage could be significantly more than a dollar amount. We're not suggesting one is good or bad. We're suggesting that they are different. It's very important to know the difference and make sure that you have the kind of deductible cost that you are comfortable with. You also need to know what your policy limits are. And that's not just the big number that covers the home, but it's the smaller items that are listed further back in your policy. So as an example, most homeowner policies will only pay $500 for a tree removal, regardless of how many trees happen to be damaged. We saw many complaints a couple of years ago. We had a tornado that went through, I think it was Ellicott City, Howard County, where there was a lot of tree damage and ended up being costly for many homeowners. And again, we have included a website address that can provide additional information. Also, you will probably have to pay some out-of-pocket dollars for some things in advance and then submit a reimbursement to the insurance carrier later. That would be for living expenses if you are forced to live outside of your home after the claim has occurred. We discussed previously that if you have a replacement cost value policy, you will recover the depreciation after the property has been replaced. And there may be expenses to protect your property from additional damages. So we're going to pause for a second now and move specifically to flooding and flood insurance. And it's important to note that the flood insurance program in the country is run by the federal government. That is the National Flood Insurance Program. And we talk about how flooding can occur. It's important to note that you do not need to live on or near a body of water to sustain damage from flooding. And we saw that in July of 2016, where heavy rains caused significant flooding, damaged a lot of property, and unfortunately resulted in a death in Ellicott City. That's a clear example of damage that can occur without living right on a body of water. So a few things to consider as to whether you should buy flood insurance. Understanding again that typically homeowners coverage does not cover flood insurance. When in doubt, seek professional help from an advisor. It's also important to note that flood policies have a 30-day waiting period. So you cannot wait until a storm is churning in the waters of Florida to buy a flood policy in Maryland. You will not be able to do that. So you need to make your decision independent of what the current weather conditions are. And we have provided additional information about flood insurance through the National Flood Insurance Program. We have that telephone number as well as a website. So let's talk about if a claim has occurred, what is the process? And naturally, your first step will be to contact your agent or go directly to the insurance company to report the loss. And again, that's why you want to keep all of this information handy and available in the event of an emergency. When an emergency occurs, naturally the first priority is to protect life. So make sure you, to the extent you can, you take yourself and your family out of harm's way. Naturally, as I mentioned previously, we want to survey our property and try to take precautions in advance to limit the amount of damage that may be sustained. And then finally, after the event subsides, you want to try to mitigate additional damage from taking place, and we've got a couple examples of this. So if there's a hole in your roof, to the extent you can get somebody, a contractor, to cover that